I would like to introduce our esteemed guest speaker, Mr. Jasbir Bindra, who has great depth of knowledge in this field. He is the founder of Alpha Omega Project Management Services. Mr. Bindra is a certified AML specialist and a chartered accountant. With a distinguished career spanning over 27 years in the financial industry, covering market risk, credit finance, treasury operations, operational risk, and AML risk management. He has held senior positions like Country Head of Financial Crime Compliance, Regional CFO, MLRO, Regional Treasury Controller, and he has been on the board of a leading multinational bank. So, ladies and gentlemen, without taking any more of your time, over to Mr. Jasbir Bindra.
That's a very good question. I think this rule has been brought out at the end of last month. And basically what it says is that if you have a property sale purchase transaction where an amount of 55,000 dirhams or more is paid in cash at any stage, so it could be a deposit, it could be one installment, then that has to be reported on the GoAML system. And so if you are a business that has got real estate brokerage, so buying and selling of properties as part of your licensed activity, then you come under the scanner for this law. Thank you. Another very interesting question, very topical, given that the country is moving more towards digitalization, and in fact the government has issued a law on virtual asset service providers just a few months ago, just after the grey listing was announced. So again, if you think about virtual assets and you start thinking about what are the kinds of controls you need to put in place, you can basically go back to your first principles, right? It's no different to any other asset at the end of the day. The only thing is it's a digital asset, there's a different channel that is being used, but from a first principles perspective, you still have to do your basic due diligence. You still have to check, for example, if it's a legal entity, who are the owners, who are the directors. You have to understand their products and services that they're offering. You have to do your screening against the sanctions list, whether it's the international, the UN sanctions, the UAE sanctions list, or even the US OFAC list for that matter. So you still have to put in place all of the controls. The only difference now is it's a different kind of asset. It's something that is, digital. So it doesn't have a physical manifestation, but nevertheless, it has economic sort of impact, and therefore you have to use that, use the first principles to go and check whether all of those factors that you would check for other assets. So like I said, UBOs, ownership, complexity of transactions, the purpose of the transactions, the purpose of the product, the geography of operations, all of those will apply to the virtual assets as well.
Okay, regarding...
The only other thing I would add to that is that under the criminal law, there is no statute of limitations. So if the money arose from a criminal offense, the law has the right to go back as many years as is required to prosecute that crime. So there's no limitation. Even if it happened 20 years ago, 40 years ago, it doesn't matter. So in that context, the bank does have the right to ask to try and establish whether the source of funds was legitimate in the first place or not. Add something to that. So basically, I think one aspect that you need to think about is the risk appetite. Each business has to define what is their risk appetite. So the examples that I mentioned earlier, one of the examples was Gupta brothers being arrested. Now that news was not actually new about their, the allegations against them around corruption. That news is around at least 5 years old. So somebody who might have used the AML software and done the review, they might have actually got that information before this arrest news came out, and they could have taken a view whether or not they want to deal with that type of a client. So that's one angle. I think your second question was what lists you need to screen against. So what the UAE government has specified under the TFS regime, very, very specifically, they've clarified this. You only need to mandatorily screen against the United Nations consolidated list and the UAE local list. Those two lists, if you find a match, you have to report under the TFS reporting categories on GoAML only for those two lists. If a person is not on those two lists, but they happen to be on an OFAC list, then that is not reported as a sanctions breach. But what the government then says, you have to consider whether there's a money laundering angle to that. So to answer your question about some people of Russian origin or Russians having bank accounts here, even though they're on list, they can't be on the UN list and the UAE list. If they're on a US list, then the organization that's providing them the service is taking a risk appetite view whether or not they want to deal with them, because it is still legal under the UAE law to deal with them, because the UAE is not sanctioned them.
Maybe.
So I think one angle to that we all need to be aware of, when somebody is suspected of money laundering offense, then the person who's raising that suspicion is not allowed to tip off or tell that person that they're suspected of an offense, because that in itself is a criminal offense. So if the bank tells you that they suspect you of money laundering, they will be committing an offense. So that's the first part. If they suspect something is wrong and they have to report you, they cannot tell you why they're reporting you. They can't even tell you that they've reported you. So that's one part of it. Second part of it, and I've seen this in my career, is that sometimes a bank is not comfortable with the risk profile of the client, but they're not necessarily suspicious. So in that case, they can also turn around and say, sorry, we don't want your business because they're not making enough returns. At the end of the day, they're in it for profits, right? If the cost of due diligence is 10,000 dirhams per person, and the return they're making on the account is 5,000 dirhams, and the amount of effort that they have to put into it to try and get more information, knowing that they're not going to make more than 11,000 dirhams on that account, maybe they'll take a view that, okay, it doesn't make sense to go in. So in that circumstance, also they will not tell you what the reason is for closing the account. I think so that's the important part, right? If we are a DNFPP, how do we manage our risk? You know, we need to understand the client. So to your point, whether it's an offshore company or a local company, that's a starting point. But just because somebody is offshore doesn't mean they're bad. So that's where you have to then define what is your risk appetite as a business. Do you want to be dealing with offshore people and spending more time and effort and energy to understand what their business is, in the expectation that you will generate a sufficient return to cover that cost? So ultimately it comes down to that cost income kind of computation for a lot of the, when we talked about banks, that's what they're thinking about. That's what we need to think about as DNFPPs. So when we're taking this business on, do we have the capacity and the resources to do sufficient due diligence to get comfortable that the business that we're putting on is within our risk appetite? If it is, and we think we're going to make sufficient money, sufficient return, then we go ahead with it. If not, then we might choose to decline that business. Yeah, I agree. I think everybody's answered it. You need to define your risk appetite. You need to first of all, it's a red flag, as Rajiv said, that some bank has frozen their account. That means there's something they've spotted which they've had to freeze. Now, typically under the sanctions regime, you're expected to freeze an account if you find a match against or even a partial match against a sanctions list. So maybe one of the things you need to do is just check whether you've done your own targeted financial sanction screening and check whether that person's name, even partially matches somebody on that list. So doing that basic check would be a start, and then you need to, as Rajiv explained, understand what their business is, what was the transactions they were putting through that bank, understand who their main customers are, who their suppliers are, and then basically undertake an enhanced due diligence to figure out whether it makes sense for you to continue to